All right, let's get into it. So first I want to talk about how you guys' credit scores work. So very poor credit is 3 to a 579. Anywhere from 580 to a 669 is fair credit. All right. Good credit is anywhere between 670 to 739. Very good credit, 740 to a 799. And guys, you want to get to excellent credit between an 800 and an 850. All right, so next we're going to dive into how your scores are calculated. So 35% of your score is payment history, on-time payments versus delinquencies. You know, sometimes in life we'll like to put things off. Hey, I can't pay that right now. I get to it later, and we never get to it. You know, you might be in college, different things come up in life, and you can't do it, but we have to stay on top of it. And before I move on, I kind of want to tell you guys a little bit about how certain things can impact your scores and the numbers that it can be when it's dropped. So an incorrect balance can hurt you guys. That can cause up to 45% point decrease. An incorrect credit limit can also drop you 45 points. Late payments can be 110 points. A collection can be 180 points, and a bankruptcy can be 240 points. So definitely want to pay your bills on time. And things do end up in collections. Again, that can hurt you up to 180 points. So let's say you had a 740, you had a 750, and then you drop 180 points. Then it's going to take time to build you guys back up again. So next, 30% is the capacity and amount that you do owe on that. And that's tying into the percentage of your credit limits available. 15% is the length of credits that you had and how long you've had those accounts. So like credit cards, how long you've had those. Even though you've had those for a while and you've paid those debts down, you still want to keep those. You don't want to close those because that's the length of your credit history. Another percent is 10%, which is new credit inquiry. So new home, new house, new car. That self-loan you can kind of get through self-lender app or the secure card or the credit card. And you want to keep those things to a minimum too. You don't want to have too many of those, or that can affect you in a negative way as well on your credit. And then lastly, 10% is the type of credit you have. So installment loans versus revolving credit. Credit cards are revolving credits. You pay those things over time. It doesn't have necessarily end date versus an installment loan. You have an end period that you're going to pay that balance to. All right. I want to dive into a little bit about tips and techniques. We just talked about paying bills on time, and you want to do that because that's 35% of your credit score. So a strong record of on-time payments is key throughout all your different bills. One of those missed payments can lower your score significantly. So again, staying on top of credit cards, your loans, different utility bills that you may have. You want to make sure you make those deadlines and at least make the minimum payments on those different bills that you have. And next, we're going to talk about paying down debt. Large amounts or maxed out credit cards is definitely going to drag your credit scores down. Again, I was just talking about the number amount that it can decrease you. You want to try to keep a low debt to credit ratio, meaning that your credit card balances should be a small fraction, of your available credit. For instance, if you have a limit of $10,000, your revolving balance should stay at a minimum of $3,000. You want to keep that low. Also, like a sweet spot when you're using your car, right? Say it's $10,000. You want to have your utilization 30% or below, but the sweet spot really is 7%. So you guys take this information and write this information down as we're going through this. Next is don't close the established accounts. So you've had that credit card, or you had that self-loan, a couple years on your credit report. You've been paying it on time. You haven't let it get maxed out. Don't close it. Keep it open, and it's showing that on-time payment history, and that's going to affect you positive on your credit report. Then you want to limit the amount of new credit applied for. As we're talking about building credit, establishing credit, and while you're fixing your credit, you don't want to keep applying for new things because those things bring on inquiries, and a lot of inquiries can impact you negative as well. You want to also establish a good mix of credit. So again, with the type of credit cards you're applying for, or the secured cards, or those self loans you can get. You just want a good mix of different credit. And a mix of installment loans and credit cards may improve your scores. However, again, too many finance company accounts or credit cards that can hurt your score. All right, so next we're going to transition into establishing good credit. How to establish good credit. So we know that good credit makes it easier to get new houses, new cars, low interest rates on credit cards and loans, higher limits, and contracts with security. So the first part about establishing good credit, you can get you a secured credit card. So a secured credit card is backed by a cash deposit you make up front, and the deposit amount is usually the same as your credit limit. So a minimum usually on different secured cards that you can get is a minimum of $200. So usually that's going to be your credit limit. And then of that limit, which I was speaking about earlier, you want to use 30% or less than that limit. So if you got a $200 balance, use like $20 or less. That's what you want to keep it to. Next, choosing a secure card with a low annual fee, and make sure it reports to all 3 credit bureaus. So Equifax, Experian, and TransUnion. And then again, we recommend keeping your utilization below 30% on all cards when possible. The next thing you can do to build or establish your credit is get a credit builder loan or a secured loan. Typically, the money you borrow is held by the lender in an account and not released to you until the loan is repaid. It is a forced savings program of sorts, and your payments are reported to the credit bureaus. These loans are most often offered by credit unions or community banks, and companies like Self or Kickoff versions, and you can use some of those online. I know a lot of people have been using Self Lender. So again, that's a self loan. You can go on there, you can register, and then you will have the money, basically paying yourself like a self savings account, and you just pay that loan. So you save it like in the savings account, and then you make the minimum payments on it every month. Next, you can also become an authorized user. So if you got a family member, a cousin, brother, sister, uncle, whoever it may be, that you know that has good credit and they keep up with these things, then you can ask them, hey, make me an authorized user on your card. But you want to make sure they got good credit before you do that, because you're going to basically piggyback off of their credit on that card and that credit history that they have with that account. So you want to make sure that they have good credit as well. Also, you want to make sure when you do that, that their card that they're using is also reported to all 3 credit bureaus as well. Because if not, then that just defeats the purpose of piggybacking off of their credit. Then there's no point in even doing it. Next, you can get credit for bills you pay. So something that we offer is called rent reporting. We use Credit My Rent, and you're able to report up to 2 years prior rental history and moving forward. So you can get on-time payments and get credit for your rental history, just like somebody who actually bought a house and has a mortgage. So you guys can take advantage of that, and I can kind of go into that at a later time. Also, another way that you can boost your credit, guys, is Experian Boost, which you can use Experian Boost. So like if you have a cell phone bill, utility bills, what you do is I actually wrote it down. I'm gonna give you guys the exact steps of how I even use it. So you go to experianboost.com. You're gonna sign in or create an account, and then you're gonna click on reports and scores, and then go to tools, and then go to Experian Boost, and it's gonna show whatever bill that you have, and then you click add, and it is gonna boost your points. I just got an extra 9 or 10 points from adding my AT&T bill. I just did it a couple days ago, and I've used it before. So that's definitely a way to, get a couple points real quick and help boost your credit. Poor credit can fill people with anxiety, embarrassment, frustration, fear, and confusion. So I want to bring out a little bit about the reasons why your credit is denied, right? So a low credit score, it's the information contained in the credit report, is combined using a complex calculation method that results in a credit score. So often creditors will deny applications based only on the score without even looking at the individual's elements in the calculation. Another reason why You may have incorrect information on there. Your name may be wrong. Me and my dad, we have the same name. I'm a junior, so some of his information ended up on mine. I had to get that corrected. As it states here, for an example, you're a junior, I'm a junior, he's a senior, and you want to make sure, you know, your name, your address, everything is right on there, or that can affect you as well. Next is debt to income ratio. So if the ratio of your total monthly debts compared to your total monthly income is too high, then the creditor may decide against extending more credit to you because they feel you may not be able to afford or handle the payments. Some banks or lenders may illegally discount non-salary income in arriving at the ratio, but the Equal Credit Opportunity Act requires creditors to consider earned income, Social Security, child support, and alimony as sources of income. Next is delinquent payment history as another reason why your credit may be denied. So if the report contains a history of late payments, you have things in collections, charge-offs, bankruptcies, those things, or the accounts were never paid, there's a very strong chance that your credit is going to be denied. And also, some people don't have credit at all. They haven't established any credit. So the lack of credit history can also hurt you or be a reason why you're denied from, you know, getting a loan, being able to get a car, being able to get a house, and other things. Okay, next, in contrast, having good credit is going to leave you confident, excited, and feeling more abundant. All right, so next, guys, I want to talk about some of the products that my team and I offer and my company offers. So let's get into it. First thing we want to do, we offer budgeting. We want to show you guys how to budget, because if more people know how to budget, it will be less people in debt. You want to be able to keep track of your saving and your spending, guys. You definitely want to be on top of that. Something else we also offer, of course, is credit restoration. We're talking about credit, so those negative, erroneous, and incorrect information, we're going to be able to remove those from your credit report profile. When someone enrolls with us, they get started, they activate their services. We do a detailed analysis of your credit report once you authorize us to pull it. And in 30 to 45 days, usually our clients start seeing their first sets of results. And also, again, we dispute with all 3 different credit bureaus. We have a credit builder service also for you guys to take advantage of as a fast track of how to build your credit and establish your credit, guys. Next, we offer credit monitoring. You guys are going to be able to keep track of your credit scores, your auto score, your insurance score, and the hiring risk index. So sometimes a lot of reason why you might be declined for a job in these days is because your high risk index, you're too high. Jobs look at these things now. They look at your credit score, whether you're handling your business, you're making your own time payments, whether you're a responsible person, and they decide whether we want to hire you or not. So having good credit is definitely essential, guys. Definitely essential. We have credit attorneys on hand also. No extra retention fees, none of that. But our credit attorneys are on hand to help you guys fight extra hard to fight cases with your credit profile. So if you guys also have ever been victims of identity theft, debt harassment, or certain credit errors, things that's hard to fight, we have that on hand for you guys. Next, I want to talk about also, we offer net worth. You guys are going to be able to keep track of your assets, your liabilities. So things that you've been able to purchase, certain investments, you're going to be able to keep track of that as well. We have a debt payoff system that's going to show you guys how to eliminate debt quickly and fast. So that car loan, the house, the medical bills, student loans, you're going to implement that in that system and show you quickly which one I need to tackle and knock down. Something I'm very excited about as well. No other company is offering this of what we offer. We have a special program called Youth Financial Literacy. And what that is a program that you guys can bring into your home, and we showing kids from grades 5th grade through 9th grade financial literacy. So like banking, credit, how to establish these things. You can teach these things to your kids. So I wasn't taught any of this coming up. And I got started, and I only knew my credit just a couple years ago. I went from a 488 to a 750 in about a year and a half's time. Nobody taught me this. My parents didn't teach me. I just happened to, I'm going to tell you how it went. A friend of mine, we had went to the first time homeowners class. He was thinking about getting a house. I had just got a job, was doing good. Was thinking about moving as well. We went to the classes. I didn't even know what my score was. Find out 488. I was like, whoa, I got to get this up. Nobody was teaching me what I need to do to establish, to build credit, to even go look for homes, how to look for a home, where to even start. So guys, definitely take advantage of this. And it also provides financial literacy in the school all across the U.S., all throughout the states, again, from 5th through 9th. And then we take $2 of each client's monthly protection plan payments, and we put $2 towards that to building these scholarships up. So in 2016, we was able to raise $100,000. 2017, we raised $170. 2018, we raised $250. In 2019, we raised $350,000. And then last year, we was able to bring in $400,000 towards this scholarship program. So over $1 million has been donated so far. Not forgetting, we also offer identity monitoring. So while we're building up your credit, we don't want to get you, in a good standpoint and then be jeopardized. So we're gonna show you guys how to protect your credit. You're gonna be able to create a will and trust and have power of attorneys and set those things up with us. You're gonna be able to have a financial lockbox. So you guys got important information like your taxes, your funds, your investments, those things. You're gonna be able to implement that in our system and have a person to contact in case anything was ever to happen to you. And also you want to store your will and trust in that system as well. We also offer a savings goal tool for you guys to help you save. Again, you're trying to save up for the house, you're trying to save up for the car, you're trying to save up for the vacation. You can implement that information in our system and show you quickly how to go about it. So the program is actually called United Credit Education Services. It's a protection plan. And in our roadmap, we give you guys a roadmap to keep you on track. A lot of people get started and they're like, what do I do next? What do I tackle first? How do I go about this? So partnering with us in month 1, we're going to show you how to activate your credit restoration. We're going to set up the credit monitoring and set up the identity monitoring. Months 2 to 3, we can set you up, focus on getting a secure card, the credit my rent, and the credit builder. So now we can establish good credit and have positive trade lines to reflect positive on your credit report. Months 4 through 6, we're going to work on debt payoff. We're going to work on budgeting. If you need the credit attorneys, you can take advantage of that. We can work on some settlement and debt validation letters, and then your goodwill letters. Months 7 through 9, we're going to work on creating that will and trust, setting up the financial lockbox, and developing your savings goals. And then continuing and moving on forward, you still want to continue working on the will and trust documents as things, may change. You may have another kid, you may get divorced, married, whatever the case may be. You want to check with your insurance and see if you can refinance some things, get some lower scores, lower your interest rates on your vehicle, your credit card, or your home. And you want to open new lines of credits to build and maintain your score. You just want to keep checking on these things throughout this whole process.